All right. I should be broadcasting on YouTube. I should be broadcasting in the VTF. Let's get this party started. It's 10 after 4. I am an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Pretty tight here on the position disclosure. Got some VXX shorts still. Paid pretty decently today. All right, let's talk about it. Can someone post the link to the YouTube in the VTF here, just so that people have it? And let me turn on my camera. Bam. Okay, all right, let's do it. For today's afternoon meeting, I took the exact same title that I used for Thursday's afternoon meeting, and I just put part 2. Deadcat bounce, or I don't even remember what it is. Deadcat bounce or something, or upside continuation. Basically, is today a deadcat bounce? That's the same question that we had on Thursday, right? So, just to recap, volatility's been massive. We had first that big down day, I guess the day after Thanksgiving, followed by the snapback on Monday, followed by a breakdown on Tuesday, followed by a gap down and terrible breakdown that gave even further continuation off of that. Then I guess it was Thursday last week where we did the last afternoon meeting where I was like, is this just a dead cat bounce? And that's when we had this inside day, right? And we talked last Thursday about the potential importance of this inside day. If we get real confirmation of an inside and up here where we're getting above and holding above, that would be really bullish, because that could be the beginning of the negation of this negative candle here. And if you can negate the December 1st candle, basically get the SPYs back above 465, then everything looks great and bullish and handsome like it always has. But if the inside day breaks to the downside and we get and hold below 450, then it's showing you that sellers are really still fully in control, driving this market lower. Feedback cycle of selling in this market is kind of continuing. And then instead, what do we get? Friday, we just got this kind of super sloppy price action, right? Where we gapped up initially like right to or right above the high of the inside day. So I told everybody in Friday's morning meeting, like, just gapping above or ticking above the high of an inside candle like that is not enough. We need to actually get above and hold above. And I mean, how much time did we spend above the inside day on Friday? Like 3 minutes. Yeah, you can see here, this is Friday's price action. Thursday we know was that important inside day. Friday we basically gap above it, and within 5 minutes we were back below it. And then the flip side was we were super weak all day on Friday, broke the inside day low after gapping above the inside day high. We broke below the inside day low, but as we honestly perfectly communicated in the VTF on Friday, we got this rally coming in the last 45 minutes of the day, and that's when a lot of us were chatting about initially shorting this VXX into this $30 area. Pat, I think classically and unfortunately got stopped out at the high of the day on that one, which stinks, but some of us were able to actually catch that down move. Sorry, Pat, don't mean to stab you further with a wound from last week, getting stopped out on the high on that one, because obviously if you could have kept some, it gave a really good follow through today. So that was kind of how that inside day played out, right? So the inside day for the market on Friday's price action gave us no real resolution, right? Trading above very briefly, trading below for a little bit, but still closing kind of in the range. And then today, this morning, we still didn't really have any further clarity, right? Because the market was all over the place. The S&P, when I was doing the morning meeting or doing my pre-market research, was up 0.3% or so. The NASDAQ was down 0.3% or so. The IWM was up 0.75%. There was a bunch of stocks that were negative. There were a bunch of stocks that were positive. So the market this morning, more than anything, just kind of seemed like it was confused. It was kind of confused and just trying to figure out what to do. You could almost feel, I felt you could almost feel like the nervousness of the market, even pre-market with how that action was going. And what we discussed in this morning's morning meeting was, basically, I think we were trading a little bit above 455 in the morning meeting, and we ended up opening up a little bit higher than that. But 455 is right in the middle of the first two important points that I wanted to see this market get above or below. 460 being kind of the first point that now I want to see the market get above, which basically would be Friday's high and also clear the 21 EMA. And 450 is the now really important downside spot for the SPYs. And, when we were opening or looking at the market near 455, I was like, I feel like you could almost flip a coin here. So I felt like the market itself wasn't giving us that good layer of probability to be long or short today. Like, everything was very neutral. We're opening up at the midpoint of these two key levels. The big picture technicals of the S&P, I would still argue, are more neutral than bearish at this point, even if the volatility numbers have gotten a little bit hectic. We ended up actually having a decently strong day today. You can see it on the intraday. First of all, you can still see the volatility, right? If you look at the IWM, I know I didn't do the big picture of the IWM, but the Russell opened up like a percentage point. And then within 10 minutes at lows, within less than 10 minutes, was down like 0.5%. Like, those are the movements we're getting right now. And then 10 minutes later is back at highs. Those are sick movements. Just as a reminder, just typical price action we saw almost all year. It's like, all right, the market's up or down 0.25%, 0.4%, whatever. And now with how the volatility has picked up and how the VIX has increased, this Russell was able to move from, basically drop 1.5% in like 7 minutes to then rally fully back that 1.5% within the next 10 minutes and then kind of continue that rally further. So that's the volatility that we have. So here, at the end of the day, just to go back to the finishing up the analysis of the SPYs, I communicated, I think, into the VTF, like, once we get in this 460 area here for the SPYs, probably a good spot to book some profit. We were not able to close above 460. You can see that we got above it a little bit. It looked like we were trying to make like a bullish consolidation pattern on a small time frame, but it makes a lot of sense to me that we rolled over and we weren't able to close above, despite the fact that we had a fairly strong day today. So even today's candle for the S&P, I don't really think gives us any resolution to this market still. We didn't get above or close above any key levels, so that's why the afternoon meeting here today is really just the same question that we've had, which is this just another dead cat bounce in a super volatile market and we're going to be rolling right back down, or is this actually the beginning of something that could potentially be more sustained? And I don't think you can know the answer to that. I think even if you're looking from the perspective of probabilities, which is always how we want to look at it, it's like almost very much a coin toss here for the S&P at this point. But let's take a look at the Qs and the IWM to see if we can get some clarity. So again, at the end of the day, I don't know if I did percentages yet. At the end of the day, we have the SPYs up 1.2%, the Qs up 0.75%, and the Russell up 2%. So the Qs were relatively weak today. NASDAQ is actually giving us an inside day today. The other, I have to check the IWM real quick. The other indices are not. They were able to tick above. But the NASDAQ's giving us a little bit of an inside day. It was not even able to snap back to its moving averages yet. So this is actually an important candle for the NASDAQ, even if it doesn't have confirmation from the SPYs and the IWM. We know that this 383 has been important for the Qs. It's where we broke out from back in October, late October. So we tailed below that on Friday. We tailed below it again today. But both Friday and today we managed to kind of scrape our way back above. So we have an inside day for the Qs. Inside and up could lead to the negation of Friday's candle. You can see here Friday is a very high volume candle that it's not quite a Maribozu, but definitely isn't a doji either. It's just a kind of a weak candle. So for the NASDAQ, if we can have an inside and up here, if Apple can show some strength, which we should look at Apple and we should look at Tesla also. We will. to try to get some more clarity on big tech in the NASDAQ right now. But if the Qs can have an inside and up and regain this 392.34, basically Friday's high from this high volume day, then the NASDAQ will begin to look significantly better as well. But at least at this point, we don't have a ton of clarity, but we're still holding above that 383. Before I look at the IWM, because we're still looking at the NASDAQ, Apple and Tesla are just such big weightings right now that it's important that we pay attention to them. Apple was actually showing really good relative strength pre-market, but ended up not closing well at all, I don't think. This kind of upside tail here in Apple, it's not really a good-looking candle. Really, to me, what it signifies more than anything else is that Apple just needs more time, maybe tighten up a little bit, build out a wedge pattern, something like that. Because right now, based on today's tail, you're potentially looking at a daily wedge building out in Apple, which technically is bullish, just because it's still in an uptrend. That wedge is being basically built at all-time highs. So it's technically bullish, so it bodes well overall for the NASDAQ. But the specifics of today's candle is definitely not bullish. So, we might need to see the Apple, pull back again to 162, something like that. I know we saw some bearish option flow hitting into Apple into the close as well, which is another piece of probability that would weigh on Apple and potentially weigh on the Qs as well. Tesla, on the other hand, though, has a decently bullish looking candle here where it held the 950 gap as kind of a support zone. I told the team in the morning meeting today to honestly avoid these electric vehicle makers today. This Tesla closed impressively well, and honestly Lucid, which I also said we should stay away from, which I guess is my mistake, because it bounced so well. I just, this LCID was gapping so big. I didn't look at the specific details of the information, but it looks like some sort of SEC inquiry into some of the financials or something like that, which generally makes me want to be a little bit scared and stay away, especially on a stock that is trading at such a lofty valuation when we know already what happened to like a Nikola when it got investigated for fraud because it was literally a fraudulent company, and this Nikola traded from a bubble high of $94 to currently trading at $10. That's a sick move. But I mean, you can even see here on the way down when the fraud stuff was coming out. So kind of based on that Nikola stuff, not saying LCID is a fraud. I know that they've got like a real dealership, I think somewhere in Florida, and they're already making some cars. I'm definitely not saying it's a fraud, but just given the move that this thing happened, that this thing has had, combined with the fact that these types of growth names that tend to be reliant on interest rates have gotten so beaten up, and this is held up, and then that news comes out, I just thought it'd be prudent for us to stay away from this thing. Obviously, in hindsight, you could have caught a nice little long trade in this thing, but I really thought it'd be more prudent, for all of us to stay away from it. And then my concern with Tesla was we've got 1,000 support, basically support $1,000. That's a little bit loose. There's a couple tails below it in Tesla, and then we've got this kind of gap support that's at 944. We can probably round that to 950. My concern was that the LCID news could actually cause Tesla to break below 1,000, and if Tesla loses the $1,000 support area, that this thing could have a really fast breakdown and possibly even lose then this gap potential support. And it wouldn't be surprising to me, and I know this turned out to be a really bullish candle as well, which bodes well for the NASDAQ. It wouldn't have been surprising to me to see a feedback cycle of selling coming in as Tesla loses $1,000, and anyone who has bought Tesla since late October is out of the money, and this thing pretty quickly, maybe not today, but pretty quickly over a couple of days, finds itself somewhere in this $850 to $900 zone again. So I actually even intraday called out a short off this opening break here on Tesla, which worked as a good initial trade if people got good pricing on it, but obviously eventually failed. And Tesla closed with a pretty bullish-looking candle here, though not without with surprisingly low volume. Honestly, I'm surprised that the volume candle on Tesla today is not significantly bigger, considering that it broke a support level with a really wide range today and actually closed well. Usually that would come on high volume, but it didn't. Again, going back to the NASDAQ, so it's interesting, right? At first it was like Apple was holding the NASDAQ up and Tesla was causing the NASDAQ to be weak, and then it almost flopped by the afternoon, where Tesla was able to bid back up to over $1,000 again, have a failed breakdown, and Apple is giving this weaker candle. So I got Apple here with a kind of a weak daily candle that tells me lower. I got this Tesla with a failed breakdown, which potentially tells me higher, and I've got this QQQ with an inside day. So how does all of that rectify itself over time? I got no idea. So we'll see, right? So that is the SPYs, that is the Qs, and then for our Russell, we know that the Russell is probably the best representation of the average stock that's out there at this point, and like most of the average stocks that's out there, has just been completely beaten up. We don't really have any new clarity here from the IWM either. It gave a good-looking bounce back today. We're up 2%, but at highs, we just got right into the ADMA. And this is another one. When we were at highs today, I was like, guys, probably book some profit if anybody caught some good longs today. So not quite an inside day for the IWM. A more bullish day, but not on great volume, just right into the ADMA on the daily. So we still have the same question, basically, that we had on Thursday, but we can just repeat it after today's trading session. Is today just a dead cat bounce again for this market, where we're setting up to break down and give continuation? We just needed to satisfy the fact that we were oversold, or is today the beginning of a setup that actually, leads us higher again, and continues more of a bigger bull market, or at least the tightening of volatility? And I think that we have no resolution to that answer at this point. I almost kind of feel like you could flip a coin. So I did spend a lot of time over the weekend thinking about the market, obviously because there's so much going on, and a lot of this sell-off, I think, wrongly has been pointed towards COVID and the Omicron variant, which doesn't mean that it's not a factor. It's definitely a factor, and if anything, it exacerbates fear, and that would exacerbate selling. But there's really just a whole confluence of factors, I think, that are affecting the market. So based on my thought process, I thought it kind of would be worth it to just go over a couple of things here with the team about what I think is affecting this market, how transitory, to use a fun word, some of those factors might be, and what that kind of means. Because I think, as most of the traders in the team here know, I like to combine technical analysis with what I call qualitative fundamentals. I describe my approach to markets as probably 85% really focused on technical analysis and 15% focused on these more qualitative fundamentals, where I don't really do heavy value analysis of a specific company's numbers or anything like that. Luckily, we have a couple people on the team here who are strong members of the team who can add their input for that as well. My thought process is always more of a qualitative, fundamental thought process to kind of have an idea of the story of what's affecting the market. So I came up with a whole host. I probably should see how many numbers it is. It's probably like 6 or so, I think, major factors that kind of all come together that have created this more recent sell-off. And again, you look at the sell-off in the S&P and the NASDAQ in particular, and even in the IWM, even the sell-off in the IWM, which has been significantly more, the Russell's gone into correction territory, it's still nothing compared to the destruction that we've seen in a lot of these growth names. And I've said it to a couple of people that I've spoken with, maybe more offline, that if I was looking at some of these stocks that are down like 80%, I mean, some of them are literally down 50% this month, And I was also looking at an S&P that was down 15%, 17%, 18%, and some of these stocks were off by that much. I would be at the point right now where I'd be really excited to start, looking for bigger buying opportunities. But instead, when I see that the S&P and the NASDAQ are off like 4% from highs, and you've got those stocks that are that beaten up, instead that actually makes me nervous. It makes me a little bit more gun shy to be super aggressive to the long side, because it's like, you can point to some of these stocks here that are off like literally 50 to 80%, and not even just from their highs of the year, but like literally from their highs of this month. You can look at that, but I can easily make the argument that a lot of these companies belong at these prices that they're at, a lot of those growth companies, right? And they've just come back down to reality after being in what was a bubble almost a year ago. I mean, I was also the first person literally a year ago, December, January, February of like a year ago, saying, oh my God, all these stocks are in insane bubbles. And those bubbles burst, but to what degree do they need to pull back? But again, anyway, I just am nervous that, okay, like, I know historically, and I like to know these statistics, I think it's important, we see an S&P correction like every 7 or 8 months. Which basically means that the S&P pulls back somewhere between 10 to 20%, like on average, not quite twice a year. So the fact that we've had such a strong year, and then the S&P is only off 4% or whatever, makes me nervous that we easily could go down another 10% from where we are. And that means that those beaten up stocks are just going to get even more beaten up. And you got to be very careful catching a falling knife if the market can't sustain its bid. But again, that's more technical. Some of the qualitative fundamental factors that I'm kind of looking at here are, I guess let's start with the obvious. The Fed. So obviously the Fed, which I still think is a mistake, that they are fast forwarding, and I'm all for reducing the tapering and eventually increasing interest rates as the economy improves. It's exactly what you're supposed to do. When the market was nervous already to begin with, and they are increasing the speed of tapering and potentially increasing the rate and timing in which interest rates go up, that is a surprise to the market, and we know that the market hates surprises, that needs to price it in. But basically what you're effectively doing is you are going to constrain capital, right? So if you start to constrain capital because interest rates are going up, which I know in practice, if you look at this TLT, the TLT actually just broke out, though they pulled back today. The TLT just broke out, so interest rates are actually going down so far. But I think that some of what is causing the market sell-off is, it's all about supply and demand. And if there's less capital that's out there, or these companies can't raise money as easily. I mean, even if you look at Apple as an example, I don't remember specifically when it was, but I thought that one of the most mind-blowing things post-financial crisis, I think it was last summer, because I remember I was in Buffalo, Wyoming at that point when it was announced. I remember Apple, which doesn't need cash, raised, and maybe somebody on the team here knows the exact numbers because I don't remember it, but they raised an absurd amount of money by a bond issuance, a debt issuance, and they don't need the money. They were just decided to do it because they could, and it was like the interest rate that they were going to pay on it was like 1%, or like less than 1%, and basically all they're going to do with that money, because they can raise it for so cheap, is just buy back stock, right? Apple won't be able to do that in the same way if interest rates are higher, let alone all these companies that actually really need to raise money. And funds and shareholders in general, if there's just not the same amount of capital that's floating around, there's not going to be the same amount of money that's going into the stock market. And I was listening to a podcast of Ray Dalio over the weekend, who, obviously he's great. I'm not taking anything away from him. He's certainly has had better performance than I've had, right? But he did say something about how all asset classes compete with each other, which is something I obviously know, but just he said it in such a simple way that it was great to think about it, right? So all asset classes compete with each other, right? So people who have got money, if you have a finite amount of money, you're deciding where you want to invest that money. Well, obviously it depends a little bit on your goals, but broadly, everyone's after the same thing. They're after return. So asset classes compete. The equity market in some ways competes with the crypto market, which competes with the bond market, which competes with the art market, right? So as interest rates go up, that makes other asset classes potentially more, have a better competitive advantage than the equity market. So why am I saying all this, and hopefully I'm saying it in a way that people can understand simply, is markets are all about supply and demand. So basically, when you withdraw that capital access to the world, to the United States, you are reducing a demand factor. At the same time as you are reducing this demand factor, we are increasing a whole bunch of supply factors. So this last year and a half or so, and I don't have the specific statistics on this in front of me, I just kind of know it to be true, we've seen more equity issuance than we've probably seen at any point in the last 10 years or so. Again, markets are about supply and demand. So one of the biggest factors that has enabled the S&P to just keep going higher and higher and higher and higher since the financial crisis in 2008 has actually been that the market has been getting smaller. So how do markets get smaller? Well, markets get smaller when there are more stock coming out of the market through things like buybacks and M&A than there are coming into the market through new IPOs and secondary offerings, right? And now we've got the SPAC situation also, which has added a lot of supply. So for most of the last 10 years, the equity market has actually been shrinking. So if you've got even more money that's out there that's going to the competitive asset of equities, as there is less overall supply, it's literally what we've seen over the course of the last 10 years, because companies are buying back their own stock and there's M&A that's ongoing that is greater than the amount of new IPOs that are coming into the market. Well, that's a supply and demand situation that leads the market to naturally move higher based on those variables. But what we've seen all of a sudden here in this last year plus is we saw all this crazy SPAC issuance, right? And we've seen all of these unprofitable growth companies, especially into the market bubble, doing the smart thing of secondary offerings, right? Like the AMC top. The AMC top this day, they saw the stock go up and they said, all right, we're doing a secondary offering to raise money. Let's more supply in AMC, and look what the stock has done since then. Even though it's tried to give these rallies, the more supply that's out there, if the demand even just stays equal, your stock is going to go down. So from a supply and demand perspective, again, we've got less demand because of less cash flow. We've got more supply because of all the issuances. What else has been factors in this market recently? Tax loss harvesting, which definitely is a factor when you start coming into the end of the year. And especially for a lot of people who have these beaten up growth stocks, well, they can realize losses in them, and that can help to offset their taxes at the end of the year. So you get tax loss harvesting. That's probably exacerbating it. What else? We've seen record insider selling. Especially recently, right? Didn't we just see my man Satya Nadella over at Microsoft announce that he just liquidated half of his position in it? Well, it seems to me that a lot of insider selling is coming in because these CEOs, who tend to be really wealthy, are trying to lock in gains prior to the President Biden tax increases on the wealthy that are coming in, right? So we know that, and again, I really don't like being political when it comes to markets. I'm just talking about this very specifically as far as implications on the stock market goes. I'm pretty sure, my understanding is that the Biden tax increases are going to be on wealthy individuals who make more than $400,000 a year. Well, who makes more than $400,000 a year? CEOs, CFOs, and executives of S&P 500 companies, right? And just companies that are publicly listed to begin with. So seeing Elon Musk sell his stock, seeing Satya Nadella sell off a bunch of his stock, they're just trying to lock in these gains at a lower tax bracket before the new year starts. And that's smart. But we haven't seen a lot of insider selling until I feel like recently, because it's actually been more worthwhile for, at least the last probably 2 years, 3 years, for people who own a lot of equity to just borrow on their equity at really low interest rates than it is for them to actually liquidate positions and then have to pay taxes. But we're seeing that insider selling coming in, and again, what does that do? That is increasing the supply on the marketplace. So it's a whole another factor that increases supply on the marketplace. On top of that, we know that markets work in feedback cycles. Buying leads to more buying, selling leads to more selling. And this is something that Pat could probably speak to even better than I can. But Pat talks a lot about like the vol control universe, right? And the systematic buying and selling that goes on in the marketplace in his morning note, which is a really important part of my research. But when you got the VIX at $35 like it was on Friday, you have a lot of deleveraging coming in from that vol control universe that is just selling. So that selling leads to even more selling. And then to add it on top of all that, we get the new variant coming out, we get the COVID numbers rising, and that just adds to all this extra fear. So, just to break down these factors more simply, we've got interest rates increasing, so that's potentially less demand. We've got insider selling from the potential Biden tax increases, that's increased supply. We've got all these new issuances that are out there, secondary offerings, SPACs, IPOs, that increases supply. We've got tax loss harvesting that increases selling. We've got deleveraging that increases selling. So then the next question is, when can we expect these factors to abate, if we can expect the factors to abate? And some of them should, right? Like tax loss selling, some of that's probably done already at this point, and that's definitely got to be done soon, right? Because once January hits, then you can't realize those losses. I think that it's also probable that the degree of insider selling that we've seen also ends by the end of the year, because they're not going to have the incentive to do it anymore. So those factors should be transitory. They should end relatively soon. I don't think that we're going to be seeing like as many SPACs coming to the market anymore. We've already been seeing that, because for a number of reasons. Like that was another thing that I was saying a year ago was a bubble. The amount of there was more SPACs, and we're seeing that now with like BuzzFeed. There are more SPACs coming to the marketplace than there were actually good companies from them to be able to merge with. So I think that should begin to abate as well. But what's not going to abate, potentially, based on the guidance we're getting from the Fed right now, is the interest rate increases, right? Is the Fed taking their foot off the gas pedal? So that should still weigh on markets, and that weighs on the markets through multiple compression. So is this pullback in the market enough yet? What about like the deleveraging from the vol control universe? That's hard for me to say. Not really my area of expertise, and the VIX is still pretty high, though I thought that Shane posted a really good statistic in the VTF on Friday. I don't remember exactly what it was, but it was something like 8 of the 9 times in the last 10 years where the VIX has been above 30, if you bought the market was up 6% in a month or something like that. So maybe that is getting kind of close to its end. But that's kind of where we're at. And then obviously, the coronavirus thing is we don't know. We just don't know how bad that's going to get or if it's going to improve. There's been some hot takes that I've liked, like our friend K Money, who I can never pronounce his name properly or know how to say it, the analyst over at Morgan. He actually thinks that Omicron, whatever, is not that bad for the markets, and that you should be buying, reopening trades. So anyway, I just kind of wanted to talk about all those factors because I spent a decent amount of time thinking about it over the weekend, and that's all the stuff that is happening right now. And I know that doesn't necessarily give anybody any real clear guidance on this market. I still kind of have some of the same worries that I've had, which is I just, in some ways, on a percentage basis, I just don't feel like the market market's down enough. But I look at a lot of these other stocks that are just down so much, and I think that they are potentially down enough. So that factor is still out there, and very broadly, the technicals in the market will tell us. So we just got to wait for further clarity on the technicals of the market. But I think it's just a really good thought exercise for us all to have a kind of a good understanding of what's going on. I guess as far as individual names go today, because I didn't really talk about that at all in my spiel here in today's afternoon meeting, we still had some really good trades. I'm not going to get into it too much because I've got not too much time. I'm seeing Genesis play again tonight. I saw them last night, and they were awesome, and I'm going back to Madison Square Garden to see them again. But we had a great call out. I thought, I usually don't like these airlines, but I called these airlines out as a buy today. American Airlines got upgraded, so that trade worked out really well. We saw bullish option flow come in UAL, United Airlines, right as it had these 2 inside fives in a row. So that was a great trade for the team. One of my ideas for today, which everyone knows I'm biased on, was this Wework. The Wework news that came out this morning was very bullish, and I still think that the Wework news that was bearish 2 days ago actually doesn't really even apply to them. They announced that a couple of things, but one of the things that they announced was that they are approaching this 63% occupancy rate, which I've been studying this company pretty closely. 63% is the percentage where the company can start to break into profitability on an EBITDA basis or whatever, and it sounds like that's actually happening faster than they had originally expected, and that's what they announced this morning. This thing had this, it almost looked like someone was blowing up and selling off, like being forced to liquidate their Wework position on Friday when the whole market was being so weak. $8 was really important. 2 days ago, there was massive buying. When the bad news came out, there was massive buying on the bid at $8. And then it lost that on Friday when that big sell-off came. So I said, if this week can get back above 8, I really like it. And it was able to do that, and it was able to be strong, and it gave a pretty good rally today, and it was up like 10% on the day. So that turned out to be a pretty good trade as well. And then, we're also looking at energy material names and financial names, but they really didn't give as big of a bid as some of the others. And then we also talked about some of the beaten up names again. Like Path was one of the ones that I kind of really liked for today versus Friday's low, and that actually barely just held Friday's low. Whereas a couple others like this Fubo was still really honestly pretty weak and lost it. AMC held in a little bit better. So that's it. That is all I got. I'm happy to answer questions. I do have a little bit of time limits today, so I might be trying to give... and Baba too. Baba was one of the ones I really liked for today as well. I called this Baba out, and we were talking about it as a team, but then I was communicating pretty early on that I loved how this Baba was holding in, so I hope some people caught that. I'm still very bullish on this Baba. I know I'm probably in a minority now of people who think that there's no way that this stock is going to get delisted, but I really don't think that this stock is getting delisted here. I just don't think it's happening. And this price from a fundamental perspective is incredible. I know that there's issues with VIEs, and I understand how all that works, and I understand the potential problems there, but I think it's overdone. Anyway. Let me take a look here at the VTF for questions. All right. First thing I'm seeing here was from Chinggis at like 10 after 4, 11 after 4. What are your thoughts on interest rates not rising with inflation? So it's a lot of what I just spoke about. One of the things I did not get into, though, which I did get into a little bit last week in some afternoon meetings, was it's definitely a concern here about how worried the Fed seems to be about inflation recently, and that they want to fast forward an increase in interest rates, but yet the market is literally doing the opposite. The market has been so afraid recently that interest rates have been going down as the Fed has been trying to increase them. That is potentially a real problem if inflation is here to stay. I still don't fully think that. I still think that there is a transitory aspect to inflation. I still think a lot of that is supply chain bottlenecks that will deteriorate over time. And I do think that there's other things that the federal government can do without the Fed to pull back a little bit on the increase in inflation. With that said, TLT 152 is a key spot. TLT had an inside day today and basically closed at exactly that 152, which is a huge breakout. So this is another one. Along with the rest of our market right now, where I just went over, it's almost kind of in a coin flip area, and we need to see more technical resolution from the marketplace. The TLT, same thing, closing right at 152 today, our key level, with it at wide-ranging yet inside day. As this ADMA is finally caught up to this 152, is this going to hold this area of support, or is this going to be a failed breakout? I really don't know. I'm inclined to think it's going to be a failed breakout, but we'll see. It could be a dramatic problem in a lower probability scenario, and I do think it's a lower probability scenario, but it would be a dramatic problem if inflation persists at a very high rate and the Fed no longer has the ability to be able to raise interest rates in a clear way because market forces are stronger than the Fed itself. I think that's a very low probability scenario, but it's a disaster scenario for the country. So we'll continue to monitor that. Yeah, but they're pulling back on the buying of the bonds, right? From Robert here, tomorrow would be more difficult at the open if all indices open right where it closed at the... Yes, yeah. I think if we have a flat open tomorrow, I think it's going to be a tricky open. Sky Capital on YouTube giving me a shout out. I appreciate that. Glad you're tuning in. Give me a subscribe and all that good stuff if you haven't already. I think I'm almost at, this Derrick the Trader, not to get off topic, but this Derrick the Trader YouTube thing that we're trying to build out a little bit, which is still pretty new. Did we hit 500 yet? Where am I at? 496. 496. Who's going to be number 500? Who's going to get that 500 in there for me? This is a new thing, so it's cool to see, maybe we can have a little party at 500. Who's gonna get it? Who's going to be number 500? All right, from Sebastian here. Today I tried an RDR in SoFi. Yeah, I traded SoFi pretty actively today, and it did give that. By the end of the day here, you can see it broke down through yesterday's low and snapped back up, and that was with that opening market weakness. I still actually wanted a bigger upside day for this SoFi. I really wanted this SoFi to be able to recapture 16 today, 16 to 1650, and it wasn't able to do that. So it's a good snapback, but I'm honestly still a little bit disappointed by it. But anyway, so you bought 1464, I'm assuming, on this candle versus lows. That is a great trade, Sebastian. That is a fantastic trade. Very well executed. You've got really low risk. So, and if you're trading the way that I like to trade, I like to look for intraday risk for daily chart reward. You're coming in here and you're risking 15 cents in SoFi, and if this thing just snaps back to the ADMA on the daily, you're getting a move to, let's just call it $17. You're getting a $2.50 move for 15 cents risk potentially on that. That's a fantastic trade, fantastic execution. So great job. You sold a lot of it, but you still have 20% left for a swing. You can check the daily and tell me what to do. It's perfect. It is a counter trend trade. So on counter trend trades, I usually recommend swinging a little bit less. If this was a with trend trade and you had that kind of risk reward ratio, you probably want to have somewhere between, like 30 to 50% of your position remaining. But since this is a counter trend trade, it probably means that you want to have somewhere between 10 to 25% of your position. So the fact that you have 20% left, I think that's perfect. You got a good profit cushion here. I think that the next spot that we want to be looking for is the space between 16.50 and 17. That's what I'm looking for. And then after that, we're looking at a move more to like 18.50, 19. So awesome stuff. You know, see if it gives some signs of an actual reversal on some small time frames, but we're a ways away from that. You know, we're ways away from a reversal. We're still in retracement mode. So let's see if we can get a retracement back to that kind of first zone. Great job, Sebastian. Love it. Yeah, Lucid's got a store somewhere in Florida. From Jackie here, could you please answer a question I have about a trade that you took on Apple today? Sure, I traded Apple today myself. The stock was showing good relative strength at the open. It sure was, and it held 165 really well. I actually bought this pullback here at 165 also, and it was nice and strong in the beginning of the day. So you placed your buy stop order 1 cent above the 15-minute 11 a.m. candle at 166.06. The 15-minute. Let me read that. 166.06. The 11 o'clock bar here. Okay, I see it. So the negation of this negative Maribozu. I probably would have looked for a little bit better pricing on that. Like for me, I was actually buying into this 165 when I was looking for it to. I was trying to anticipate that it was going to pivot in this 165 area. So I did not buy very much though. I bought just a little bit, and it was really more of a buyback actually, an add back than an add. So I should definitely clarify that. I was able to capture that. I don't dislike what you're doing here though. You found the most relatively strong tech stock that was out there, though it didn't close great. But you didn't know that it wasn't going to close great when you were taking the trade. You bought it after it had a 15-minute correction back down to the ADMA. You bought it after it negated a negative Maribozu. So this is all kind of telling you here that you're looking for this to be a higher low on the 15-minute chart that leads to a higher high. The only thing I would say about that is when I look for these pivot low type trades, there's really two setups that I like, and this isn't either of them. I like an inside and up here, and I like a continuation hammer here. So basically, if this candle here at 11:15, this 15-minute candle, was an inside 15 after this negative Maribozu, and that was breaking up above, I would want to buy the break of the inside 15. So if this candle was an inside 15, which it's not, but let's just pretend for a second that this 11:15 was an inside 15, I would actually want to buy the break of the inside 15, not the break of the negative Maribozu. I want to buy the break of the inside 15 because the break of the inside 15 is potentially showing me a pivot that leads to the break of the negative Maribozu that lets me get in at a much better price and a much better risk reward. I don't love buying that high of a price, though I understand your thought process, and I don't think your thought process is wrong. I want to be buying the inside 15 and up, or I want this to have like a better tail here, so I have a continuation hammer into this moving average area, and I can buy off that low as soon as the candle closes. Both of those are going to give me a better risk-reward opportunity. If you're buying, you're looking at 15-minute charts, which is the right thing to do at this time of the day. Oh no, did I just lose my internet? Test. Can you guys still hear me? It was just light speed went down? All right, you guys can still hear me, but I lost my light speed. All right, well, right now I still got this chart up, so I'll continue to analyze it, and then we'll see what happened here. It's so weird for light speed to go down at 5 o'clock. Something must be wrong with their server or something. But anyway, yeah. So I want the 15-minute hammer. I want the inside 15 and up. And if you're buying, the problem with your trade here is the risk, not necessarily the reward, but maybe that too, but definitely the risk. Because you're buying the negation of this negative Maribozu. Your only proper stop loss is this low. So you're buying, and I don't think I've even fully read your question yet, but you're buying 166.06. Your stop loss has got to be 164.90. $1.05, dollar plus risk on that. It's not terrible, I guess, for Apple. I just don't love it at that time of the day in that spot. But you do have the relative strength and everything else. I I want a better executable setup on the small time frame, which is what you don't have here. So let me reread the rest of your question here. I got filled at 11:44, so the time of day wasn't great, and my stop was 164. Okay, so you gave it the right room. Well, the Qs are breaking through highs, so you had the NASDAQ on your side. Around 12:30, Apple was struggling to break through 166.50. It sure was, and that's when we start to see Apple go from being relatively strong to being relatively weak, and it goes back to what I was talking about in my Apple analysis earlier. My question here is, should I have tried to exit from my trade when I saw that Apple was struggling to get back to highs, or is it wise to stick with the buy, take the ticket, take the ride mentality there? I think you gotta buy the ticket, take the ride. I'm gonna stick with that thought process here on your trade. It's too easy just to talk yourself out of stuff, so don't do that. Just do the right thing by your trade at that time. You don't know that this is gonna fail. You don't know, even though we know that the spies are coming into some resistance. You don't know that they're going to not give upside continuation. This is showing some weakness here, but it hasn't failed. It's just consolidating a little bit more than you want to. I think all that's fine. My only critique, and it's a minor critique, because actually first let me start by giving you a compliment. You're doing so many things right. Jackie, you're doing so many things right. Your thought process on this trade, you're looking at the layers of probability, you understand the time of day is against you, you're looking at the market, you're looking at the relative strength, you're waiting for the negation of a negative Maribozu, you're doing so many things right. My only more minor critique is I would want a little bit of a better continuation setup here that could give you lesser risk and therefore a better, greater risk-reward ratio, like some of the factors I just mentioned. All right. Next here from Noah, do you place any higher probability of what type of inside candle, now the color doesn't matter, versus the type of candle? Now the color doesn't really matter to me on that. An inside bar is just a rest bar, so I don't really care if it's green or red. Obviously, if it closes at lows, it's probably going to break down. If it closes at highs, it's probably going to break up because it's already there. But for the most part, I don't really care about that. What is the benefit to the company to buy back stock? The company that buy back stock is lowering its float. So it's the opposite of why a secondary is bad, right? So a buyback is a good thing because if you've got the exact same demand that's been out there, but you've got less supply. Why is there going to be less supply? Because the company is literally buying back its own stock. I love, like, one of the biggest peace of mind things about being involved in Bed Bath & Beyond is I know that these guys, probably every day, the own company is on the bid. That's an extra piece of probability that's on my side, right? And I've got less supply over time. A secondary offering does the opposite, right? It creates even more supply. So if there's the same amount of investor demand for a company, just like, I mean, look at SoFi. Maybe, I would definitely argue that the degree of this pullback is getting a little crazy. But SoFi announced their secondary offering on this day, on November 16th. All of a sudden, we got more supply, equal demand. Your stock is going to go down. Go down from 23 to 14. Okay, maybe that's a little much. Obviously, the markets help with that. But, that's buybacks and secondaries. When they announce a buyback, do they start it the first day they announce it? No, I think there's so most of the time, not always, but I think a lot of the time when buybacks are announced with their earnings report, and then I think that they've got like a quiet period. There's a quiet period before and after every earnings report where they cannot buy back their own stock. I don't know how many days it is before and how many days it is after, but they can't do that. But the market front runs it. Market sees, oh, hey, MGI just announced a buyback. Oh, hey, Bed Bath & Beyond is going to accelerate their buyback. And the market's a forward-looking mechanism, so investors front run it. Thanks, Jonathan. From Zahor here, what do I think about AZO? Oh, I don't got... am I just not getting charts right now? I am on... No, I'm not. I can get a 5-minute chart at AZO. I can't get a daily chart. Hey, Zahor, because Lightspeed went down for whatever reason, I can't type up any new charts. So we can look at that tomorrow morning. AutoZone broadly, I think, is a good company. I can't see the chart right now. I don't like to trade it because it's like a $2,000 stock, and it trades a very, very, very thin. So it's not what I like to go to, but it's definitely a good company. I can't even see the chart right now. From PT here, is there any chart I can get? I hate just looking at. I still get the SPY chart. I hate looking at black screen. Besides the 8 and 21 EMAs, what order indicator do you use in your chart? I don't use very much indicators at all. I use 8 and 21 EMA. I use Japanese candlesticks. I look at volume. I look at some simple moving averages. I look at the 20, 50, and 200 simple moving average. That's all I use on my charts. Doesn't mean I don't pay attention to certain other indicators. I just don't necessarily pay moment by moment attention to them. Like our team here gets good information posted into a lot of different areas. So like I pay attention to when Josh tells us where the McClellan oscillator is, what the number is. I pay attention when Pat does his morning note and he looks at Ichimoto clouds and he looks at Bollinger Bands. I pay attention to that information when other people post it. I don't personally use any other indicators. Isn't a buyback like window dressing? It lowers the outstanding shares. Yeah, so it lowers the outstanding shares and increases the EPS. But I wouldn't consider that to be window dressing. I think the term window dressing implies that you're, just like, what's the other expression? Like makeup on a pig, right? Like you're just trying to make something that's bad look good. It doesn't necessarily have to be that way, right? Like look at Apple. Apple's been buying back its own stock for a long time. And I know Warren Buffett has spoken about how, and again, I don't know the numbers off the top of my head, but I know Warren has spoken about like, hey, look how awesome it is. I originally made this investment in Apple, this amount of shares, and I owned this percentage of the company. But without actually even buying any more shares, I now own a significantly higher percentage of the company because there's so much less stock that's out there. If you just want to talk about price, a buyback is good for stock price. So yeah, it boosts EPS a little bit. It makes that number look a little bit better. But for me, the biggest part about it is lowering the tradable float. You lower the tradable float, you got the same demand out there, and let alone the fact that you got the company on its bid itself. That helps make stocks go higher. Are your orders still active if light speed went down? I don't know. You can ask the trade support team. They can check. All right, gang. It's after 5. I'm going to end the meeting. Good day today. Still a lot of questions about this market, so we'll take it day by day. We'll see how it goes tomorrow morning. I'm probably going to be tired because I'm going to this Genesis show again. But that's it. Have a great night.
Did your light speed crash?
Yes, my light speed crashed. I said that in the meeting. I'm still in the meeting.